Hey guys, welcome back to my finance fitness channel. I started this channel to break down personal finance and make it easily understandable and accessible to everyone. Unless you studied finance, a lot of these important topics just don't get covered in school. Yet we all have to deal with money matters in our everyday lives. So if this is something that interests you, I invite you to subscribe to the channel. The 3rd of November is a hugely significant date. Not just because it was the 3rd of November in 1964 when the residents of Washington DC were allowed to vote in a presidential election for the first time, but also because the 3rd of November in 2020 will see the next US presidential election, and that will see President Donald Trump seeking a second term up against his Democratic Party opponent Joe Biden. So what will a Trump or a Biden presidency mean for the economy and for your investments? That's what I want to take a look at in today's video. Let me start by saying that this is not a political channel, and I'm not going to say whether one candidate is better than another. I'll leave it up to you to decide. But rather, I'll be focusing on each presidential candidate's policies and what these may mean for the US and the world economy at large, and also what that would mean for your investments. So maybe you're thinking, well, I'm not American, so why should I be concerned about the US elections? Well, we should all be concerned because it's really significant. America is undoubtedly one of the global superpowers, and their influence is massive. A US president is often referred to as a leader of the free world. It's the biggest economy in the world. It has the most widely used currency in the world. It's the biggest producer and consumer of oil in the world. In South Africa, we have the saying that if America sneezes, we all catch a cold. And that's just to highlight that anything happening in America has a ripple effect through the now interconnected and very globalized world and financial markets. In fact, I recently did a video where I looked at the significance of the US dollar and look at whether they will be able to retain that global dominance. So if you're interested in that video, I have included a link in the description down below. Also, interestingly, there have been many studies done that assess the stock market performance under a Republican and a Democrat president. And in fact, what most of those studies have found is that there's almost no difference. But of course, the impact of an election is much bigger than just the stock market, right? On a global scale, you've got geopolitical relationships with other countries, the impact of regulation and also taxation. And these have been approached very differently by Trump compared to Joe Biden. And aside from who wins the election, there's also the question of who wins the House and the Senate, because this will determine how much power the political party of the president is able to leverage. No, not that poll. No, not that poll either. Election polls and why they matter. Well, something we learned in 2016, actually on 2 occasions, is that polling is not always accurate. If you remember back to June 2016, the UK was voting on whether to leave the EU or remain. And all the polls were indicating that the UK would remain in the EU, but that ended up being wrong. And then just a few months later, the polls were indicating that Hillary Clinton would become the new president of America. But then Donald Trump won. And this creates a lot of uncertainty. And when the polls are off the mark for an election or referendum, this has a big impact on the financial markets. Because the financial markets look at the polling data and what the implied result is, and then prices in that result. And when the result ends up being different than what the polls were indicating, then the financial markets try and adjust as quickly as possible. And this can result in a lot of volatility and big fluctuations in the financial markets. And that can impact your investment portfolios. Now, from what I've read, a lot of the polling techniques and methodologies have improved and have been refined since then. And hopefully this time around, it'll be more accurate. But time will tell. And so we need to be careful of not over-relying too much on what those polls are indicating, because as we've seen in recent cases, they can be wrong. Presently, the polls are indicating that the Democrats will win this election, and that will see Joe Biden as the new president of America. Just to throw in more uncertainty for good measure, both Donald Trump and Joe Biden haven't really made it clear whether they'll accept the results on election day. especially because of the high number of mailing votes taking place this time around when compared to previous elections, and the risk that these may be tampered with. Now, of course, this creates more unease and uncertainty in the financial markets, and it could drag out the time frame between election day and when the losing candidate concedes. So we'll have to see in coming weeks how this all pans out. So let's take a closer look at each presidential candidate's plans and policies and see how these could impact the economies and financial markets. Well, Donald Trump has already had 4 years in the hot seat, and this gives us good insight into what would likely continue if he was successful in retaining his presidency. There's been a strong focus on infrastructure spending, reducing regulations, and jobs during his presidency. And prior to this pandemic, there were some indications of improvements in unemployment, for example, which hit a 50-year low at around 3.5%. The Republicans have also been keen on stimulus, but to a lesser extent than what the Democrats have been. Trump has also tested positive for the sickness, and this is a significant development for the elections. Maybe it affects his ability to participate in the presidential debates, or it affects his ability to continue with his campaign rallies leading up to the elections. He may want to postpone the elections because his health is not where he wants it to be. All of this will create more uncertainty in the financial markets. No doubt he'll be getting some of the best medical treatment to try and speed up his recovery. And from what I understand, he's now left the hospital and is back at work. Just recently, we saw that the Democrats and the Republicans were struggling to agree on the new stimulus plan, where the Democrats wanted to do more stimulus compared to the Republicans. So if the Democrats win the election, you would expect that they may want to increase the amount of stimulus to the economy. And this generally means providing financial checks to the population, especially those that are unemployed or businesses that are struggling. And so you would expect that this money being put into the economy would be a positive. But of course, they'll probably have to increase taxes in order to pay for the stimulus. So probably there will be a positive impact in the short term from the stimulus being put into the economy, but this may be partly offset in the longer term by higher taxes. So Joe Biden plans to increase the corporate tax rate from 21% to 28%. And most analysts expect that the corporate profits will decline by about 10% as a result, because now they have to pay more taxes, which will reduce their net profits or bottom line. Since the value of a stock price is really just future cash flows and profits discounted to today, if we know that those future cash flows and profits will be lower, then it's likely that the stock price will be lower as well. Aside from the higher corporate tax rate, the impact on the individual is also that the Biden administration want to increase capital gains tax and also the individual income tax, especially for people earning over $100,000 a year. And since the polls are indicating that Biden is likely to win this election, this may explain, at least partly, why the stock market has been coming down a little bit in recent weeks. So it's not always clear if the stock market is going to drop or jump up, depending on the elected presidential candidate. But in the lead up to that election, the news flows, the polls, the outcome of the presidential debates will likely lead to a bumpy ride up to the 3rd of November. And this creates a lot of uncertainty and volatility in the financial markets. And as I've mentioned before on this channel, if there's one thing that the stock market hates, it's uncertainty. So I'm not planning on making any big investment decisions, especially for the stock market, between now and when the election results are confirmed. Some asset classes may perform better than others. For example, under Donald Trump, he created a lot of real estate investment incentives, which saw real estate perform really well. And if the Democrats win both the House and the Senate, they may be inclined to roll back some of those changes. And this could potentially have a negative impact on real estate and the stock market, as mentioned earlier, if corporate tax rates are increased. And this is just an example to illustrate how some of the asset classes that you may have invested in could be affected, and also to consider when you're making investments going forward. Now, I like to take a longer term view when it comes to investing. And in this case, you don't have to worry about short-term ups and downs in the market, trying to time the market, and it makes it easier to stay calm and relaxed during periods of volatility. Adopting a dollar cost averaging approach has been proven time and time again to be a very effective investment strategy for most people. Here, you're just investing consistently every month and not trying to time the market based on short-term fluctuations. But if you wanted to take advantage of some short-term opportunities, especially when there's a lot of volatility in the market, Maybe there's a good company whose stock price comes down quite a lot. That could be your chance to buy some of that stock. So it's good to keep a bit of cash ready so you could take advantage of those opportunities when they pop up. I'm curious to know what you guys think will happen under a Trump or a Biden presidency. Tell me in the comment section down below. Also, if there's any topics that you're interested in, let me know so I can keep them in mind when I'm creating future videos. I read and respond to all of the comments. You can also follow me on Instagram, where I'm now posting a few times a week, both finance stuff, but also incorporating some fitness things as well, because that's another big passion of mine. So here's my handle. And that's it for the video today, guys. I hope you enjoyed it. And if you did, as always, make sure you hit the like and subscribe buttons. I'll see you next time.